Alright guys, I've just got here to the Emirates lounge. I'm on my way to Dubai, and before I could even flip my laptop open, this trade that I was in hit targets which covered my first class trip to Dubai. So I'm going to walk you through this entire strategy because there was also one on the New Zealand dollar as well, which I couldn't take because of correlation risk, but I want to just show you this particular pattern setup because this is very, very popular. I've done phenomenally well. If you watch my last few videos, you know, we just absolutely made a killing with this particular pattern that I'm going to show you. So buckle up and we're going to get stuck into it. Before I teach you this strategy, I'll just go back for a minute just to talk about what happened this morning. So I got up around 4 AM and about 5 AM I checked the charts, and I'd been triggered into a trade late last night, went to bed, and it was looking good when I woke up this morning. As I say, there was another setup on the New Zealand dollar which was very highly correlated with the Aussie dollar. I'm not allowed to take both of those setups at the same time, so I took the Aussie dollar and yeah, woke up, made my coffee, made my way to the airport, and as soon as I arrived to the lounge, I flip out my laptop to check how it's doing, and the targets are hit. So really, really nice. And what I'm going to do in this video is I'm going to walk you through the rules of engagement into this particular setup. It's a very, very powerful strategy. It's a ratio pattern which some of you guys are familiar with, and I'm going to walk you through it step by step so that you understand how to identify these things for yourself. Okay, so firstly I'm going to walk you through the rules of engagement, the rules into this particular setup, so that you understand them, because the most important thing is you're going to have these objective set of rules that allow you to identify the same pattern every time, because you can't be near enough, you know, and that doesn't work in trading. You need to be consistent. So the first thing you're looking for, and this is the most subjective part of any pattern because it's down to your eyes, and that is to see the initial impulse move, the first move, okay? And what this ratio pattern is, it's a series of ratios that take place in order that give us a very high probability of an end result being, target being hit, right? That move that you just saw me hit on my own targets. So the first things first is you're looking for this impulse leg. Now here you can see that this was the impulse leg, and what an impulse leg is a sore thumb move, we call it. If you scrunch up your charts, you can see how obvious they are. They're very sore thumb, they stand out like a sore thumb, and they're referenced as impulse legs, which is one that breaks previous structure, or an anchor leg, which is it doesn't break previous structure but it's still a sore thumb move. Okay, so that's the first thing we're looking at. Now a particular pattern that I'm going to be going through is commonly known as a bat pattern or a bat formation, and what you're looking at is once you've discovered the impulse leg, everything is onward from that. Okay, so the next thing you're going to do is bring on your Fibonacci retracement tool, and you're going to go from the X point, which is the starting point in this case, to the A point, right, which is the top of the impulse move, and you're looking for a minimum test of the 50% retracement, okay, but you cannot hit the 618 retracement. All right, so if we bring on our triangle tool here, you can see that in this case we want to hit the 50% minimum, but we can't hit the 618. So here's the 50 and here's the 618. So you have to, for the B leg, has to test the 50 but not hit the 618. Got it? Okay, now we can remove this for the time being because the next move we're looking for is the C leg. All right, so let's just draw this out. So this is the X point, okay, this is the A point, right? Now we've now got our, they're called XABCD patterns or ratio patterns. This is our B point, right? So now we've got our B, what we need is a C leg. And the C leg rules are from A to B, Fibonacci retracement, we must hit the 382 but not violate A, okay? So in other words, we can push up from the B point. We have to hit the 382 for it to be a valid C point, but we can't push past A, okay? So we're looking for a minimum of 382, and then we can then start looking for the D completion, which is where we're going to look to place our orders, right? So I'm going to remove this for the time being. So the next the final piece in this puzzle is the decompletion, and the decompletion, again, Fibonacci retracement from X to A. It's going to be a lot to take in. You're going to need to, you know, pause this, save this video. You're going to want to re-watch this because it's going to be worth its weight in gold, literally, and you're going to want to learn these off by heart. Okay, and once you get it, you'll start to understand it. And I know a lot of people will be like, oh, it's too complex, it's too complicated. I've traded these for over a decade, and I've made an absolute fortune trading these things. Okay, so the last decompletion is you bring on your fib retracement, you go from X to A, okay, so the lowest point to the highest point, and you're looking for the 886 retracement. Okay, so this is your completion point. So in other words, the pattern will look like this. Now, that's the completion point. That's where, in this case, this is a bullish pattern. So we're looking for a bullish move. We're going to be looking to trade this up, in other words. Okay, and where we're looking to take targets is a 382 retracement from A to the completion point. So this is the move we're looking for. This is the high probability move. Now the beauty with these patterns is we know that if we get an anchor leg or an impulse leg and we hit the 50% retracement but don't touch the 618, and then we hit the 382 but don't violate A, and then we hit the 886 completion, we know if all of those ratios are hit in that order, in that sequence, then we know there's a high probability of hitting that 382 retracement. Okay, now just for those of you who are a bit more advanced, on my own testing of these, I found that when there is a equal measured move at the completion point, there is a 19.5% higher strike rate, and when there's a double bottom at the completion, there's an 18.5% higher strike rate. So if you get an equal measured move and a double bottom, it's a really high probability setup. But either way, these back patterns are above 60-65% strike rate in my own personal trading anyway. Okay, so that's pretty good. Okay, so now we can see this, right? What we're going to do is we're going to use the fib extension tool for a stop loss as well. So the stop loss has got to go below X. So what I like to do, because it's very quick and very simple and very objective and very consistent, is I use that fib extension and I put my stop loss at the 113, and I call that an inversion. Okay, so my entry's going here, target's going here, and my stop loss is going here, and you can see it's a 1.6 to 1. So a 1.6 to 1 setup with a 65% strike rate is a pretty good setup, right? So that's what we're looking at. Okay, so those are the rules of engagement, and I've got this printout here that you can go and download if you like. I'll put the link in the description of this video. But that's what we had here. So now let's test that on the real life example. Okay, so we're going to go from fib retracement. This was the A point. So let's label this up so you guys can really see what we're doing. I never know where they put the... Oh, here it is. Right, so we've got the X. This is the X point. Okay, now I know this is in hindsight, but I'm going to drag on my fib retracement to that A point up here, right? And you can see that we hit that 50% retracement, but we didn't hit the 618. Okay, so now what we've got is our valid X, A, B. Okay, so we can label this up A, right, and we can label this up B. Okay, now what is the next rule? The next rule is we need a fib retracement from A to B, and we need to hit the 382 but not violate A, if you remember. So you go from A down to that B point, and you can see we hit the 382 right here, so it was valid at this point, but we pushed up, we didn't violate A, and this is where we pushed up to. Okay, so that's a valid C leg, right? So we can now put a C leg in there, C, right, and remove this off, keep it nice and clean. So here's our C leg, right? And then finally the decompletion was a fib retracement from X to A, and we're looking for the what? 886. Now the 886 is down here, so you can see that completed the pattern at this point. Okay, now you can see that price pushed a little bit lower, and I'll explain what I do about that. So We're now in the setup. We get in down here, and what I'm doing down here, I actually set a buy limit order down there because it was a set and forget order. You can enter at market. If you come into the market and you see you're trading at that completion point or even lower, you know, it's you're getting a better entry down there because the reward to risk profile is going to be higher. But you can set a limit order at that point, and once you're in, let's just say we get in here, right? We're looking for that 3/8, so we get our stop loss in first of all. So A to X, fib extension tool, use it as an inversion, right? Our stop loss is going down here, okay? So if we got in here, our stop loss went here, okay? And where did our target go? Well, our target is a fib retracement from A to D, okay? So the initial target is here, right? Now, because price pushed down, if price pushes down lower than the completion, we still want to look for that 382 move. This is important. So you can't just leave the initial target where it was. You need to adjust it with price, which means although this was the D completion, and this is where you're looking for that 382, when price pushes down, you have to adjust the fib with it, the Fibonacci retracement with it. So you can see that the target then became 1.1 to 1, okay? But we're still getting that 382 move. Does that make sense? Otherwise, you just don't know what you're looking for. You know, now you can go and test leaving your target in place, but for me personally, I always adjusted with price so that I knew I was getting that 382 move. Now, finally on this, I take a 1 in, 1 out. So that's one position, and I get in full position and take my profit out full position. Okay. Now you might decide to take multiple targets, and if you do, you know, you can consider taking the 618 retracement, which is known as the golden mean. Once you start getting into these Fibonacci ratios, you know, it's a different world. You know, you go into a right rabbit hole. But some people like to take a secondary target at the 618. So what you would do in that case is you enter your full position size. Let's just say you're trading 2 mini lots. Okay. You get in 2 mini lots, your stop loss is 2 mini lots, but your target one is 1 mini lot, and when that's hit, you then adjust your stop loss and you move your stop loss to break even or just above, and then you just let the trade ride for the extra 1 mini lot for target 2s, and you can't lose any money at that point. So that's what trailing, you know, you just roll to break even and let the thing run, and you're in a risk-free trade. So that is the bat pattern. Now, as I say, there's a lot to learn. You're going to want to print out the guide, and you're going to want to take your time and get to learn these. You know, there's bats, Gartleys, shark patterns, cipher patterns, crabs, you name it, butterfly patterns, and they've all got different names because they've got slightly different rules of engagement, right? So, as I said, you can't be almost or nearly. It has to be very objective and consistent. This is the bat pattern. It's a phenomenal pattern, one of my favorites out of all of them because of the reward to risk profile and the frequency of setups. You know, I made a killing on these last week, and you can too. So go and do some testing on these, download the rules, okay, go and practice identifying them, draw them on your charts, go and do historical testing, and let me know you got on, because this one, as I say, just paid for my first class trip to Dubai. See you in the next one.